In today's video I want to show you a nice trade that happened in the Euro-dollar 5-minute chart yesterday. This is another great example of how contextual trading is a powerful tool for you to have under your belt as a trader. The techniques involved in this trade are simple, but they involve many subtle details that make all the difference in the end, so pay close attention. The two horizontal red lines you see in the chart mark the most obvious support and resistance levels of this market. It's important to observe that these are not mere support and resistance lines, but they are zones, which are formed by two different levels. These two lines cut through important details as I already said. Number 1 shows the origin of the upper red line, which was a small gap down, which implies seller power. Number 2 marks 3 consecutive fractal candles with bearish qualities, but the most important thing here is to observe how the red line catches the underlying frequency of those upper tails. In number 3 we see price coming back to test this resistance zone, and in number 4 we see price zooming this well-established zone with violence to the upside. The conclusion to all of this is that we may be able to find a trade opportunity when and if price reaches this zone again, but now it will be in the form of support instead of resistance, which is precisely what happens in number 5. Once again, when price reaches the zone, it produces a fractal candle at the same time that it produces a simple reversal divergence. Beyond that, we have an upsloping orange line that catches the frequency and angle of the last significant upward market vector. Observe that this orange line almost coincides with the lower tail of the fractal candle number 5. The consolidation of a fractal candle within the context of these other 4 or 5 elements enables us to open a long trade at the open of the very next candle. The stop should be a few pips below the lower tail of the fractal candle in a situation like this, and our target should be at least 3 times as big. Let's see how this market responds. The great thing about a methodology like this is that we have the best of subjectivity aligned with the best of objectivity. Without a certain subjective analysis first, we cannot reach the necessary level of analysis depth that enables us to make sense out of simple candlesticks. On the other hand, without objective tools to seal this subjective context, we cannot act in the right moments. When you combine the best of both worlds, we have a methodology that enables you to trade near the reversal points of the market like you saw in this video. If you enjoyed the video, don't forget to click the like button, subscribe to the channel, and leave your comment below. Thank you for watching.